Palantir Technologies, a data analytics company, recently joined the S&P 500 index. This is a major milestone for the company. It reflects Palantir's growing influence and recognition in the market. This move has also had a significant impact on the company's stock price. Palantir's stock has surged by an impressive 127% in just 1 year. This surge is partly attributed to its inclusion in the S&P 500. Joining this prestigious index signals to investors that Palantir is a major player in the U.S. economy. This recognition alone can attract new investors and boost stock value. The S&P 500 is a benchmark of American business success. Inclusion in this index signifies that Palantir has truly arrived as a major force in the tech industry. This move is a testament to the company's innovation and growth trajectory. Joining the S&P 500 is no small feat. Companies must meet stringent criteria to be considered for inclusion. These criteria ensure that only the most financially sound and influential companies make the cut. One crucial requirement is consistent profitability under generally accepted accounting principles, or GAAP. Palantir has demonstrated its ability to generate sustainable profits, meeting this critical benchmark. Additionally, companies must maintain a minimum market capitalization, reflecting their overall value and size in the market. Palantir's ability to satisfy these rigorous requirements speaks volumes about its financial stability and growth potential. Meeting these standards demonstrates to investors that Palantir is a reliable and profitable investment opportunity. It showcases Palantir's commitment to sound financial management and sustainable growth. Palantir's inclusion in the S&P 500 has triggered a wave of new investor demand. This surge in demand stems from the mechanics of index tracking funds, which are investment vehicles designed to mirror the performance of specific market indexes such as the S&P 500. When a company like Palantir joins the S&P 500, these index funds are obligated to purchase shares of the newly added company. This mandatory buying is necessary to maintain the fund's alignment with the index's composition. As a result, a significant influx of capital flows into the stock of the newly included company. This phenomenon further amplifies the upward pressure on the stock price. The increased demand from index funds creates a favorable environment for existing shareholders as the value of their holdings appreciates. This dynamic highlights the tangible benefits of being included in a major market index like the S&P 500. Palantir Technologies operates in the realm of custom software solutions, specializing in data analytics and artificial intelligence. The company's software platforms are used by a diverse range of clients, including government agencies, intelligence organizations, and private businesses worldwide. Palantir's software is renowned for its ability to analyze vast and complex datasets, extracting valuable insights and patterns that would otherwise remain hidden. This powerful capability has made Palantir an indispensable partner for organizations seeking to enhance their decision-making processes and gain a competitive edge. From optimizing military operations to improving hospital efficiency, Palantir's software has a wide array of applications. The company's technology has been deployed to combat financial fraud, track human trafficking networks, and enhance cybersecurity measures across various sectors. Palantir's ability to address such critical challenges underscores its value proposition and market relevance. Section 5. Government contracts and revenue growth. A significant portion of Palantir's revenue stems from government contracts, particularly with the U.S. government and its allies. The company's software has become deeply integrated into the operations of various government agencies, including defense, intelligence, and law enforcement. Palantir's close relationship with the U.S. government has been a key driver of its revenue growth. The company's ability to secure large and long-term government contracts provides a stable stream of income, contributing to its financial stability. Moreover, Palantir's expertise in handling sensitive data and complex security protocols has made it a trusted partner for government agencies dealing with classified information. This trust and reputation within government circles have further solidified Palantir's position as a leading provider of data analytics solutions. Section 6. Strong financials, promising future. Palantir boasts a robust financial profile characterized by a strong cash position and zero debt. The company's balance sheet reflects its financial prudence and ability to generate substantial cash flow from its operations. With over $4 billion in cash reserves, Palantir has ample resources to invest in research and development, pursue strategic acquisitions, and weather potential economic downturns. This financial strength provides a solid foundation for future growth and expansion. Furthermore, Palantir's heavy reliance on U.S. government contracts acts as a buffer against economic uncertainty. Government spending tends to be more resilient during economic downturns compared to other sectors, providing a degree of stability to Palantir's revenue streams. Section 7. Valuation and growth prospects. When evaluating Palantir's stock as a potential investment, it's crucial to consider its current valuation in relation to its growth prospects. Palantir has garnered significant attention from investors, leading to a high valuation based on traditional metrics. Currently, Palantir's stock trades at a price-to-earnings ratio of 85 and a price-to-earnings growth ratio of 2.8. These ratios suggest that the stock may be expensive relative to its current earnings and expected growth rate. However, proponents of Palantir argue that its high valuation is justified by its long-term growth potential. They point to the company's expanding customer base, innovative product offerings, and the increasing importance of data analytics in today's business landscape. Section 8. Market volatility and risks. The stock market is inherently volatile, subject to fluctuations driven by a myriad of factors, including economic conditions, geopolitical events, and investor sentiment. Palantir's stock, like any other, is not immune to these market swings. Investors should be prepared for potential price volatility, especially in the near term. External factors such as interest rate hikes, inflation concerns, or geopolitical tensions could impact market sentiment and lead to fluctuations in Palantir's stock price. Moreover, while Palantir's reliance on U.S. government contracts provides a degree of stability, it also exposes the company to risks associated with government spending decisions. Changes in government priorities or budget cuts could potentially impact Palantir's revenue streams in the future. Section 9. To buy or not to buy. Given Palantir's current valuation and the inherent risks associated with the stock market, investors should approach the decision of whether to buy more Palantir stock with caution. The stock's high valuation suggests that a significant portion of its growth potential may already be priced in. While Palantir's long-term prospects remain promising, the current market environment calls for a measured approach. Investors considering initiating a new position in Palantir may want to wait for a more favorable entry point, such as a pullback in the stock price. It's essential to conduct thorough research, assess your risk tolerance, and consider your investment goals before making any investment decisions. Rushing into an investment based solely on past performance or hype can be detrimental to your financial well-being. Section 10. The case for holding. For current Palantir shareholders, the decision of whether to sell or hold their existing positions is a matter of individual circumstances and investment objectives. Those who believe in Palantir's long-term growth story and are comfortable with the associated risks may choose to hold on to their shares. Palantir's continued innovation, expanding customer base, and strong financial position support a bullish case for the company's future. The company's focus on artificial intelligence and data analytics positions it at the forefront of a rapidly growing market. However, it's crucial to acknowledge the potential for short-term volatility and the inherent risks associated with any investment. Investors should continuously monitor Palantir's performance, industry trends, and macroeconomic factors that could impact the company's future prospects. Section 11. The final word. Palantir Technologies has emerged as a prominent player in the data analytics and artificial intelligence space. Its inclusion in the S&P 500 is a testament to its financial strength and market recognition. However, investors must approach the decision of whether to buy, sell, or hold Palantir stock with a balanced perspective. While the company's long-term growth potential remains intact, its current valuation, market volatility, and inherent risks warrant careful consideration. Thorough research, a clear understanding of your investment goals, and a disciplined approach are paramount to navigating the complexities of the stock market. Ultimately, the decision of whether to invest in Palantir Technologies is a personal one that should align with your individual financial circumstances, risk tolerance, and investment horizon.